In this presentation, I want to take you through our investment philosophy and the process that we follow, and to see how it is standing up in this current very, very volatile market. Please take note of our disclosures. So let's start with our investment philosophy. We think of ourselves as owners of quality businesses with high growth potential and that have significant competitive advantages. So how does this pan out? Okay, what is the process that we follow to be able to meet that investment philosophy? So firstly, we develop investment themes by considering mega trends and the macroeconomic environment. From these investment themes, we identify a universe of companies that we assess based on our valuation models. This then provides us with a short list of companies that meet our investment criteria as well as our ownership criteria. We then construct a portfolio based on asset allocation guidelines, for example, local versus offshore, how much in the South African market versus how much in the offshore markets, how much do we have in equities, bonds, and cash, which sectors would we want to be invested in, and how much in each of the sectors, and lastly, what are the individual sizes for each of the individual stocks that we want to own, or bonds or cash for that matter. I would say that our DNA is in equities because that basically provides you with long-term growth potential. But there are times when we have a higher allocation of cash and bonds in our portfolio because we assess that the market is overvalued at a particular point in time. Now, at the beginning of the year, after doing some analysis, we identified 6 investment themes that guided our decisions for investing in this year. Now, most of these were in fact a continuation of themes that we had identified last year, and some of them, in fact, even over multiple years before that. So the 6 themes were demographic tailwinds from aging populations and the values of the millennial and Gen Z generations. Innovations in technology and advances in the use of technology by businesses and people also we identified as a major investment theme. And then modern diseases affecting large populations like obesity and diabetes, and the advances in the treatment of these diseases is also a major theme that we identified. Fourthly, it was the increasing need for energy, particularly in this world of AI and the continued growth, of industries across multiple geographies. But these also impact the climate, and we see that as a broad theme to be able to identify what are the opportunities for us investing in the energy sectors and how to try and manage climate change. And then the stock market valuations we assessed to be very high, particularly in the US. And then lastly, it was geopolitics and the trade wars, which we see panning out at the moment. In fact, of all of these at this point in time, we see the last 2 being the high stock market valuations, and the geopolitical environment as having had the most major impact on performance over this quarter. So how did we, try and manage, through these themes? Okay. So as indicated before, we like to hold more cash and bonds during times of high valuations and in dangerous macroeconomic environments like we have at the moment. So if you look at our asset allocation for the fund, we had over 20% of our investments in cash and bonds. But then we also diversified across various geographies, having about 15 to 16% in the South African market, just over 14% in the EU, and about 39% in the US, as well as almost 10% in emerging markets outside of South Africa. And then if we look at our asset allocation in terms of the sectors that we were invested in, ICT still plays a major role in our investment philosophy. We trimmed some of these positions, but that high allocation hides, some fact, like for example, Amazon and a company called Mercado Libre, for example, are classified as ICT businesses, but they are in fact a large component of Amazon, for example, is a retail business, and Mercado Libre is actually a fintech bank, using technology, but classified as an ICT business, but actually it's a bank. You can see cash and bonds, cash and fixed income, having a high allocation in both the fund as well as in our model offshore portfolio, and then a nice level of diversification across retail, financials, biotechnology, investment management, developed markets, and the energy sector. So really an overall diversified portfolio, trying to meet our investment themes and taking into account the risks that we see in this particular market. In the Lunar BCI Worldwide Flexible Fund, our top holdings are, for example, 9% in the Vanguard Short-Term Treasury ETF, but also a very large position in Berkshire Hathaway. Okay, Berkshire Hathaway, managed by Warren Buffett, sits with a large amount of cash, and they have been offloading cash from the beginning of offloading shares, from the beginning of last year, and sitting with a large pile of cash, waiting for opportunities to be able to go back into the market. And then you can see Eli Lilly in the obesity play, JP Morgan, Walmart, UBS, ASML, Amazon, and a few others. The colors show you the different sectors, and you can see the diversification there. So how did we perform actually? On the Lunar BCI Worldwide Flexible Fund, where we get official returns statistics, our one-year track record was a return of 2.27. Okay, not a great return, but reflecting, for example, both our conservative view last year when the market did keep on running, but also the downturn in this last quarter. But over the 2 years and beyond, you can see still a high degree of consistent performance in almost every period, an annualized return of double-digit figures, except for the four-year period. But most importantly, that over the long term, in the 5 years and above, we still continue to retain our top quartile position across the worldwide flexible funds category. And if you look at all funds in South Africa, since we began 8 years ago, we are one of the top 10 of all funds that existed at that particular point in top 10% of all the funds that existed at that particular point in time. So very pleased, with our long-term track record. If you compare us against what the market did up to the end of March 2025, the JSE up almost 19%. Okay, really great performance from the JSE. The S&P 500 up 6.8%. The MSCI Worldwide Index up 5.82%. ZAR USD actually rand strengthened against the dollar over that period by almost 2%. And as I indicated, our performance of 2.27%. So to some extent reflecting our conservative view last year, but also if you compare us, for example, to the MSCI plus the ZAR, which is basically a better indication, you see that we have underperformed by about 1.75% over that period. So our outlook then is that the uncertainty still persists, and we are continually assessing how this may all play out. Our concerns are that we may find ourselves in a global recession and it may be in a new Cold War. That's our biggest concerns. But saying that, we continue to try to identify opportunities, and we are fully aware that the best opportunities come when sentiment is lowest. Now, we do think that valuations have improved, but at the same time, we think it might improve even further. The global obesity problem is still there. We think there are still opportunities in there. And certainly the buying habits of people in a recessionary type environment will change and give us opportunities in particular companies that can actually benefit from that type of an environment. It's risky out there, and we do exercise caution, but our job is to try and identify the risks in the market, but also where the opportunities are, and we continue to look out for that. Thank you. This gives you just a quick synopsis of our products, as well as where you can contact us, and also follow us, on our weekly blogs. We continue to provide insights into our thinking and where we see the markets are. And lastly, thank you, and just wishing everyone caution out there. And if you are traveling or out there, please be safe. Thank you.